Welcome to Silicon Valley Life. In each episode, you'll get an insider's look at what makes Silicon Valley special, how people pursue ideas, deal with failure, and enjoy life. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, concordiaventures.com. Now, here are the hosts of Silicon Valley Life, Naeem, Zafar, and Meena, Meyyappan.
Hello, viewers. Good to be back with you. Meena, how are you doing?
I'm doing great. I was just looking forward to Silicon Valley Life today. So much of energy and conversations to be had, which I'm looking forward to.
Yeah, I know you've been traveling a little bit. You were for work, so you came back. I also have done a bit travel, more travel coming up. We'll talk more about it later. But today we are excited because a lot of people asked us about angel investing. Who are these angel investors? Why do they invest? Do you make money angel investing? Well, guess what? We have just a guest for you. So we want to welcome Ron Collett, who is a part of Band of Angels. So let's welcome Ron.
Right.
And not only, hey, Ron, how are you?
Good. How are you, Naeem?
So I've known Ron for like 25, 30 years because he was running a consulting company. He's been part of the semiconductor industry and electronic design automation as a data quest analyst. Then he became an entrepreneur, started his own company. McKinsey bought the company, big news. And he'll tell you more about what the company did. But now what I'm most excited is he is now a winemaker and he's an angel investor. He's also a president and CEO of a company, NMX Software, Global Software. So Ron, welcome, and tell us a little bit more about who is Ron?
Thank you, Naeem. As you said, well, I'll correct you a little bit. I think that we go back 34 years, if I'm not mistaken. Yeah, so it's been quite a while. So just by way of quick background, education, my background is electrical engineering and law, as it turns out. I started 3 companies. The first was a consulting company doing business and technology and market strategy. The second was a software company, an early AI company that we started in 2000. And by the way, the Band of Angels funded that company. And as Naeem, you mentioned, the company was acquired by McKinsey a while back. And it was, we then transitioned after that, we evolved to after the acquisition, to a services company providing software development services. So I'm on my 3rd company now and enjoying it immensely, working with a lot of different kinds of companies, startup companies, established companies, and so on and so forth. So that's the high level. Happy to go into any other detail that you might want to investigate or explore.
Meena, you were going to say?
I actually wanted, what is really interesting is as you walk through everything in your career path, how did you debunk angel investing? Coming from this kind of a background, how do you debunk it? How did you get involved in it? Just out of curiosity, share with all of us.
Sure. So as in most things in life, it's a little bit random. So curiously, the band funded my company, as I mentioned, back in the year 2000. But I didn't actually end up joining the Band of Angels until I think it was 2017 or so. And it was just random that I ran into a guy and who was in the band, and he said, "Hey, have you ever thought about joining?" And I said, "That's really funny. No, I haven't," which is kind of ridiculous since you funded my company. So long story short, I went to an event. The band has an annual dinner event, and lo and behold, there were a myriad of different people that I had known over the years that were members of the band. And so that's how I got into an institution with respect to angel investing, to be contrasted with individual angel investors out there.
So yeah, tell us a little bit more. What's the angel investor and how does a Band of Angel is different than being just an angel investor?
Yeah, that's a good question. So angel investors, I guess, I don't know the formal definition, but I would say they are seed investors. After a company receives funding from, say, friends and family, which is kind of the first step or the first rung of the ladder of funding. After that comes, these days it would be called, I guess, pre-seed. And I think that's where angel investing starts. But perhaps there's an alternative definition. That would be my definition.
And then Band of Angel is?
So Band of Angels is the oldest angel investing group in the country. It started in 1994. And it's a group of individuals, around 175 to 200 individuals. And it's the common charter among everybody is investing in startup companies. And we pool our knowledge and skills and experience and capabilities. We define a process for evaluating companies, and then we invest in those companies. But one thing that's important to recognize is that the Band of Angels, like perhaps many angel investing groups, is not a fund. It's individual investors that are funding a particular company if they are interested in it, to be contrasted with, for example, a venture capital fund.
Right. So what I understand is that sometime there may be 10 people interested in a company based on their background, but some people understand robotics, some people into enterprise software. So this way they can divide up their due diligence. And is that how it works?
That's exactly how it is. And for example, in the Band of Angels, we have something in the order of 10 working groups. So we have, a software group, and we have an agricultural technology group. We have an energy group. We have a life sciences group. We have myriad different working groups and areas of expertise. And on a monthly basis, we get in roughly 50 different deals that we whittle down to 3 that have the opportunity to present to the overall membership. And that's really the ultimate goal, is to get in front of the entire membership to pitch your company.
So Ron, a question for you, right? Angel investing, is highly risky, right? So how do you, first of all, how do you become one in an organization like yours, right? How do you become one? So you have some kind of risk guards for yourself. And second thing is, the question is, how many chances you're going to make it big out of all the bets that you put in? On average, what is the percentage like to become profitable out of it?
So if I understood your first question, Meena, is how do you become an angel investor?
To be a millionaire?
As part of like the Band of Angels, for example.
Yeah.
It's by invitation, and it's just by personal connections. So each month, we have a monthly dinner in which the 3 selected companies pitch the band. And at that dinner, we invite prospective new members, individuals that may want to join. And they are invited by other existing members. And that kind of continues to feed the pool of individuals. Is that?
That makes sense.
Yeah.
That answers my question. And how many chances you're going to make it big out of an investment?
Well, every time someone invests, they think, that they're going to be successful. I would say, 1 in 10, you might hit a home run, quote unquote. So maybe, or 1 in 20, probably more realistic. And then a handful, let's say you have a portfolio of 20 companies, for example. Mm-hmm. I would say that, one, probably maybe 2, you have an opportunity to hit it pretty big. For example, recently there was a company that was funded by members of the Band of Angels. It was a pet food company. I did not invest. And there was a 12x return in a fairly short period of time, within 2 years or something like that, right? Pet food.
Amazing.
It's unbelievable, right?
Yeah, pet food, yeah.
The CEO, a woman, she had her act together up there. She gave a great presentation, but, I wasn't smart enough to realize that pet food was such a big deal. It's like dog food, I think, or cat food, one of the 2. Anyway, so I'd say, you have those odds, and they're long odds. And then maybe there's 3 or 4 that you make some money on. Maybe there's 3 or 4 that you break even on, and the rest lose. They're the living dead, or they go out of business, or they defraud you, or something. All of the above happen.
It looks like to be a viable angel investor, you should aim to have a portfolio of 10 plus. Otherwise, it's very risky.
I think that's probably 10 to 20 is probably the right number. Yeah, I agree.
Yeah. And then it looks like from the numbers you gave me, correct me if I'm wrong, maybe 500 companies approach the ban. You listen to about 40 per year. And how many do you fund?
So about 600 come across our transom every year through various mechanisms. We end up funding about 20 or so of those. It's a very rigorous process to whittle it down. Each month, let's say it's an average of 50 companies, average. Some months it might be 30, some months it might be 60, whatever, but let's say it's an average of 50. They go through various working groups and committees until ultimately they are selected among the top 3 or invited to pitch to the overall band of angels. And there's about, I guess 30 or so companies that pitch, and about 2/3 of those get some level of funding.
Wow.
A typical check size is like 100K, or you're talking about $500,000?
For the company or the individual, or both?
Both.
For the band as a group, typical when you make a deal?
I don't know if there is a typical, I would say, I'll just take a stab at it and say it's 250,000.
Okay, so that's substantial.
Yeah, but it can be as low as 25,000 if one person is interested and really is excited about a deal, but nobody else is. The one person may invest. We've had other deals where it's in excess of $1 million, and we have 20, 25 or more members that want to pursue the deal. So 250 to 300,000, I say, is a good target.
Now, are there annual dues to be part of the Band of Angel?
Yes, there are. I don't know if I can disclose that, but it doesn't break the bank, but there are dues.
Something reasonable, yeah.
Yeah.
Something small, yeah. So, Meena,
Mm-hmm.
what else do we want to know about being an angel investor or doing angel investing?
So here's a question, right? I mean, angel investors, we have a lot of different, like groups that do angel investing together. And then there are individuals who just do angel investing. It's very, very interesting to see the contrast because, yes, with the angel investing organization, you get a lot of rigor and, you get a lot more, validation or they do some amount of rigor before you all invest in it. So what's the risk of us going out to be an individual angel investor without being part of a group? What's the advantage of being in a group?
So that's a great question, Meena. I think that obviously we leverage a tremendous amount of knowledge and expertise as a group. So when we're doing due diligence, a team is assembled of, some number of individuals that may end up investing, and we pool that knowledge. And so we have various meetings with the company. We do due diligence on the company. And so we take advantage of, strength, the so-called strength in numbers. I think as an individual, I think if somebody has made a substantial amount of money in a prior investment, and they have perhaps an expertise in a particular area, I think they go by gut or their own personal experience. There are some very, very successful angel investors that invested, for example, in Google, that didn't know anything about search, but liked the idea, were very wealthy, and could easily write a fairly substantial check. So I think that's the way it kind of evolves.
Yeah, that makes sense. And here's another question that comes to my mind. Angel investing, what I see is they rarely take any risks in social behavior startups. You're going to see a lot of startups that are social behavior, changing the way people, behave or live lives and things like that. What I find is a lot of people don't take that risk, especially in angel investing. Have you ever considered that as a topic in the groups that you're part of, or is that not really true what I'm saying? I'm just very curious because I know social behavior startups are very hard to get funding. You look at the stories of Airbnb, you look at the story of Meta, you can look at the rejection rate, right? It's so many people. It's just that a random person actually takes, a chance on them, rather very, very rarely an angel investing group. Um, yeah.
So what's the profile of the company?
Social behavior, like, I'm going to share my bedroom, I'm going to, like connect with my friend over photographs, the Instagram, the Facebooks, things like that, right? I'm going to share my car, which because I'm not using it fully. These are changing the behaviors. It's
Yes.
improving my security. It's doing a lot of things you don't like.
Yes.
Kind of.
I think we do invest in those kind of things, but I think you're right. There's a great deal of risk or perceived risk associated with that. You know, for example, you pointed out Airbnb. I mean, who in their right mind would think that people are going to give their house out to strangers, right? And that's going to be a business, right? That's very counterintuitive, right? And a lot of angel investing groups passed on that deal, including the Band of Angels, because it sounded extremely risky at the time, and it surely was. I think that you hit on something that's very important in angel investing, and that is there's a lot of focus on de-risking the deal. And what that means is to look at factors and indicators that show that there is reduced risk. There is never going to be zero risk. I mean, angel investing is angel investing. But things like that you want to look for, that we look for, is have there been sales so far? Is there market traction, tangible market traction? Is there a real product? Is there defensibility? Who's on the board of directors? Things of, there's probably 25 or 30 different things that we look at when we're evaluating a deal, all sort of creating with the goal of creating a constellation focused on de-risking that deal.
So let me ask you a different question, maybe switching the gear to, since you do come across a fair amount of deal flow, what are you most intrigued by? Where are you most excited about? Which sector? What types of companies?
One of the very well-known investor in our organization who is well-known on the national front, he famously says, I like boring deals. Boring deals make money. And I think there's some truth to that. Things that, some motor company, some electric motor company, right? And they have some new capability with the motor. And it's like, well, that's not particularly exciting, but, that could make money. I like those kind of things because I think there's some merit to that argument. In terms of an application area, I personally like life sciences. My background is software, so maybe the grass is greener on the other side. I don't know. But life sciences, like medical devices and things like that, those things become must-haves. And if you can find something that really is a must-have, that's very exciting. For example, there's a deal that I'm involved in, which can measure the oxygen level of a fetus in the mother's womb non-intrusively and accurately. And that can give a very good indicator if there is a problem with the fetus early on. And that becomes a must-have, for in the pregnancy space and so on. Other kinds of things. Another one that I'm involved in is a hernia mesh company, a new kind of mesh for treating hernias that's far superior to anything else. And these two companies are actually doing well and I think on their way to success. So I tend to like life sciences, but there's also, a lot of compelling software deals. Obviously AI, but I think AI becomes somewhat of a commodity at a certain point, and most companies end up integrating AI into their solution, but AI is important, no question about it. We study it very closely in the band.
Yeah, well, AI is like internet or database. It touches everything. So the
Yeah.
question is, what are you doing on top of those LLMs? Yeah,
That's
Meena,
right.
you were going to say.
No, no, I'm just saying AI is, there's only two things. It's the infrastructure and how we get all the data. And the second thing is the application. And over
Application.
time, it's just like another layer that you utilize in what you're trying to solve.
Right.
Yeah, just like there were a lot of database companies, and databases become an underlying routers.
That's
What
right.
you do on top of it becomes interesting.
That's right. That's right. And it's all about getting the data and training the models, right? Fundamentally.
Yeah.
I mean, in my second company, the one that was acquired by McKinsey, it was an early AI company, and it was predictive analytics. And it estimated engineering resources and schedule for new semiconductor IC design projects. And the key is, or the key was, capturing enough data to calibrate models to do those accurate estimations. So again, it's all about the data.
That's right. You didn't call it LLM, but that was kind of your own large
Early,
language model.
yeah,
And
very
yeah,
early.
Yeah.
very early. So, anything else which you want to talk about? Your some hits you had in your as an angel investor. Some names we would know, or they were all things
They're
which were not.
well, I don't think these are not household names for
Yeah.
sure. So I don't think you would have heard of any of these companies, and some of them I can't really disclose it at this point. But I'm involved in a semiconductor company, for example, that looks very exciting in the fixed wireless access space and satellite communication space. But there's some others I'd have to look at them, and some I'd weep over. There are, by the way, there's frauds out there, by the way, so you have to be careful as an angel investor.
Yeah,
So-
my best outcome was a company which I invested in as an angel investor was how to charge an electric fleet. Suppose you have 75 buses. How much to charge bus number 31, which has batteries 58%. Your route is 121 miles, and Sharon drives it, and Sharon is a crazy driver. Battery is 6 years old, versus bus number 42 is driven by Larry. So it gets very complicated very quickly.
Yeah.
So the software was to figure out which to charge when, and Ford came in and bought the company. That was 38x return.
Wow, that's really good, Naeem. That's
Yeah.
great. Congratulations.
Yeah, never know.
Yeah.
Meena? Yeah.
What I was just about to say, Ron, is like, is there one company that you said, oh my gosh, I wish I had done this?
The pet food company. It's a 12.5x return in the pet food company. The deals that actually attract me, and this is just, my preference, and there are many in the band of angels that like this too, which we call small ball deals, which is a 2 to 4x return, which is lower than a typical target in 2 to 4 years. So it's 2 to 4 and 2 to 4, which we call small ball. And those are attractive to me because I like the short-term horizon. Typically in a software company, the time to exit is 9 years, even though we see on slides, and presentations from entrepreneurs that, they're going to exit in 4 or 5 years. We know that's not going to happen. And you have to be ready for not 9 years, but necessarily, 9 years, 12 years, that kind of thing. It may happen sooner than that. So I'd rather have a shorter horizon on return and a lower return, possible return, personally.
Any trends, any particular trends in the Valley that you're very, following, enjoy, something that you can share with us? Because we talk a lot about technology and trends here as a pattern, something that attracts your attention.
That's a good question. As I said, I really like life sciences because I think it's this is the century of life sciences. I think that, and we're really starting to see that. We see so many deals coming in, dealing in the life sciences space. It's really terrific. I think that the last 40 or 50 years was the computing era. I mean, it's obviously continuing to expand and grow and improve and so on, but the areas that I'm most intrigued in is neuroscience, I think that in terms of technology, for studying the brain, healing the brain, and that includes pharmaceutical technology. There's a company that I invested in that has a drug that targets autism, and it's actually being heavily funded by a family office that who one of the members' children is autistic, and so they have a personal interest in it. But I think that if I sort of abstract everything up, life sciences and specifically neuroscience.
Got it.
Is there something you're seeing in personalized medicine or CRISPR we should be excited about?
There's a lot going on in that space, but it's a long haul. We have had a number of deals that have come in, and it's really there's a long time horizon. I think it's in the very, very early stages, and that's if you are willing to hang out for a long period of time, there could be an opportunity there. One that I passed on was in that space because it was really a research. It was a research project at this point. Another one that I was very close to investing was to cure retinal disease.
Mm-hmm.
And it was the insertion of cells into the eye, and these cells will be manufactured in space. And the company had already been on, I think, 9 space missions with its technology to manufacture them. They talked about looking for an exit in 3 or 4 years. And at the end of the day, I was just like, if this happens, it's gonna go big, but it's just too early. It was preclinical trial. I think that when you're looking at investments that are in the life sciences space that are preclinical trial, it's very risky, right? Post-clinical trial, it's a bit of a different animal.
Wow, I had no idea you were so much into life science. A lot of good stuff here.
Yeah, that's really interesting. Like I say, grass is greener. Software, no software. I know software too well. Too much can go wrong there.
Yeah.
Neat.
Yes.
And looping back in, now let's start kind of shifting our focus away from angel investing technology. Let's go into what any events or places you've been into recently that you'd like to share with our viewers, Ron.
Silicon Valley life. Yeah.
Yes. I don't think my life is typical of Silicon Valley. I play a lot of ice hockey. And interestingly enough, Silicon Valley has the largest adult hockey league in North America, 3,500 adults, bigger than anything in Canada or New England or Detroit. So I spent a lot of time at the hockey rink where the San Jose Sharks professional ice hockey team practice. I like a lot of, Silicon Valley has, great hiking and great biking. So I do a lot of biking up in the mountains, which is, a boatload of fun. I also do a lot of sailing on San Francisco Bay, which is an incredible place to sail. Periodically, the America's Cup is held up there, and that's because the winds are so strong. Routinely in the summer, 25 miles an hour. The winds are, which is pretty fierce out there.
You own a boat, or you rent a boat, or catamaran?
I'm part of a club.
Okay.
And maybe I'll take you out there if you want.
I'd love to sail, actually.
Yeah, it's about 40-foot sailboats, so they're not small boats, and we typically go with 5 or 6 people and have a great time.
I know you're, among other things, you're also a winemaker.
Yes.
You make your own little batches.
Yes, that as I said, there's many things in life just random. So I was friends with some people a while back, about a dozen years ago, and one of the guys said, "Hey, you guys want to make wine?" And he said, "Anyone know how to make wine?" And we said, "No." We'll figure it out. And but now we make a lot of wine. We make about 4 or 5 barrels of different varietals each year, which equates to 1,200 to 1,500 bottles. We make Cabernet, we make Chardonnay, we make Zinfandel, we make Pinot Noir, and a few others. So it's a lot of fun. It's actually a big excuse to hang out with your friends and be festive.
Absolutely. Any recommendation on your favorite places to eat, or any small holes in the wall only you would know?
Well, I think my wife is the best cook I know. So you should come over sometime, Naeem, for dinner. A restaurant that I'm going to go to in a couple of weeks from now that I've been to before is La Fourette, which is in Almaden Valley.
Yeah, sounds like a French restaurant.
Yeah, I'm
Very nice.
looking forward to that. Boy, I'd have to ask my wife. She's the big foodie on restaurants.
Well, that makes sense. I mean, I just went to Selby's. It's in Atherton on El Camino. First time, it was very good. It's a Michelin one-star restaurant. The ambiance is excellent. Food was excellent. Service was great. Selby's. Never even heard of this before.
I'll take a note of that. Another one that you may want to check out. It's actually co-owned by a member of the Band of Angels. It's in San Francisco, and it's called the Lazy Bear. And very, very famous. I don't know if you've been there or not.
Yeah, Lazy Bear got his second Michelin star. It just made the list again.
Yeah, it's I don't know if you've been there, but it's a tremendous experience because they have like 2 seatings, and each seating has 24 or 30 people, and the chefs come out during each course and explain what that next course is going to be to everybody. And you're at a big long table with people, and you're drinking. You're doing very nice wine pairing, and it's maybe a 6 or 7 course meal. But terrific place. Need reservations in a big way, but I'd recommend the Lazy Bear. My wife says it's her favorite restaurant in the entire Bay Area.
That's a good endorsement. So we have to
she calls it the lazy dog. No, honey.
Yes,
No.
So, Meena, have you been experimenting with some good places to hike, eat, drink?
Yeah, actually, I've been away from food because I've been traveling, so not been visiting a lot of restaurants here. But this week is my favorite week of the year. This is our Menlo Circus Club. Please note it here. They host their, once a year charity horse show, right? And basically, what it is you get to see horses jump 5 foot right in front of your face for prize money of $50,000. So that's on Saturday. The coming Saturday is Menlo Circus Club, and it's their charity horse show. So I just went yesterday for fun, and I got to watch what you call a horse and hound race, where the horse does a jump off, which is timed, and then the dog does a jump off in return. After that is like a relay, and then the whole thing gets timed between the horse and the hound, and the winning, person gets the ribbons or whatever you want to call it. But it's kind of fun to watch because you don't watch, horses and dogs compete together ever, right? It's things like that.
Yeah.
So please do.
Looks like there's a question in the chat there. The question is, what's the typical time from first pitch to money in for the Band of Angels? I would say anywhere from 6 weeks to 12 weeks. We can do deals faster sometimes. The right pieces have to be in place. We could do a deal in 3 or 4 weeks. But I would say more typical is 6 to 8 weeks.
So another question, Nate was asking. Nate, by the way, is a PhD from UC Berkeley. So, and I'm an investor in his company.
Oh, okay.
They're doing an electric airplane or drones, now they're calling it, autonomous, for delivering things like organs to hospital. When you
really?
You're not delivering pizza, so price is no object. Get me the kidney now.
Yeah, that's big. That's important stuff. Yes, for sure.
So what about you? Do safes? Go ahead.
Yeah, we do safes. We do convertible notes, obviously priced rounds. Nobody particularly likes safes, but they've become somewhat of a de facto standard. But a safe with a cap, right? We have to be protected in that regard.
So safe with a cap.
Yeah.
More important than discount is cap.
Yes.
Yeah, because now they're choosing either discount or the cap. So you like the cap.
Yes.
And typical cap these days, is there such a thing as typical cap?
I'm always hesitant to say typical, but what we're seeing these days is say 12 million.
Yeah. Yeah.
Something like
Yeah, it's
that.
gone up a little bit. Used to be more like 8-ish, but now it's more like
Right.
12-ish.
Right. I mean, we see deals that come in, 20 million is the valuation. And, there's different schools of thought on that. Two schools, really. One is, well, the valuation shouldn't matter if it's a really good company and a really good opportunity and they're showing traction and, the risk is lower and so on. So the valuation should be secondary. On the other hand, it is angel investing, and a high valuation means obviously you're going to get a smaller chunk of the company. And so, but if you take the other side and say, well, that doesn't really matter if the company is successful, right? So I personally, I kind of attack it in two ways. In short, one is I'm typically looking for a lower valuation. I'm not looking to invest in companies with 20 million, with a $20 million valuation, unless it's a follow-on round, and there has been some significant milestones achieved, traction, things that can warrant that kind of evaluation. But sometimes we'll invest in a company that has a $20 million valuation and they have zero revenue.
Sometimes you do crazy things like what I did. I invested in Anthropic. I think the valuation was like 15 billion.
15 billion.
Well, Anthropic, you got to get into the game here. So it's too late.
That's a lottery ticket.
I put a little tiny, just to get in. So guys, time may be running out, but I did want to say to our viewers and me that finally I broke down after 10 years, bought my ticket to the Burning Man. So I'll have some stories to share with you in September.
You're going to come back looking all different, Naeem. I don't even want to know what that's going to be.
Everybody's scaring me that what's going to be there, but we'll see.
You're wearing beads and stuff and say, I traded my wedding ring for these beads, but they're very special.
Exactly. Well, great to have you on. It was always a delight to see you. So thank you for making the time for us.
My pleasure.
Thank you, Ron.
Meena, you get the last word.
I get the last word. Thank you very much for sharing your wisdom with us, because so many people ask this very simple question: what does it mean to be an angel investor, and what's the risk involved? Thank you for sharing the stories. I'm sure a lot of people will be following up with you on more and more detailed questions, and also sharing a little bit about Silicon Valley life that you live here. It's what we enjoy is when people shared all the oddball things they do, because I think Silicon Valley is full of these extremely professional, only tech geeks. There's so much to the valley and the value we provide outside of just tech, right? So thank you for sharing that. Thank you very much.
Thank you. Cheers.
Cheers. Thank you.
You've been tuning into Silicon Valley Life with your hosts, Naeem Zafar and Meena Meyyappan. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, concordiaventures.com. Thank you for your positive feedback, comments, questions, and for sharing this show with others.